Welcome back. Well, CONCOR has managed to surprise the street with a good performance after a long time because last few quarters have been a bit subdued for the company. But now we are seeing a bit of an improvement both in terms of the volumes as well as margins have managed to expand. And that's the reason we are seeing a beat versus the street expectation, and the stock is reacting positively as well. We have Mr. Sanjay Kapoor, the CMD of CONCOR, joining us on the show to talk to us about all of that. Sanjay, hi, good to have you on the show. Just wanted to begin by asking you, in terms of this revenue growth, what part of it was led by volumes? And going forward, what's the volume outlook, given the fact there has been a lot of turbulence in terms of the macro data we have been getting? What's your sense of how the volumes will pan out for the rest of the year?
Hello, good morning. As you know, we have posted a very good growth in volumes, and we have firm indications that for the coming part of the financial year, we will have good volumes. There are very good imports which are coming to our fold, and exports are not that strong because of various geopolitical reasons. However, the domestic demand will continue to be very, very strong, and we have taken some initiatives also for capturing the domestic business which we are not having right now with us, like FMCG cargo. The company has placed orders for 12-feet high containers, which are suitable for FMCG cargo, which is a low volume cargo, which is a high volume, and it needs lot of space, and the weight is very less. So 1,000 12-feet containers we have already ordered. Out of that, 180 containers we have got. So this will be additional business in domestic stream that we will be targeting in the coming months. So there are very good indications from the market, and we hope that we will sustain this performance that we achieved in Q2 of this financial year. And the guidance for the financial year remains the same that was given at the start of the FY by CMD.
So, Sanjay, this is Ajay also joining in, that you expect the momentum to continue and hence are retaining your guidance. I want to understand the domestic part of the business, and that too largely led by railways. How's the movement, container movement on that front? What kind of conversations are happening, and volume trends are you picking up from your clients?
See, domestic, as you may be observing, is posting a back-to-back growth of more than 25% from the 2 financial years, which has been a very, very robust growth. As you may be aware that the containerization in domestic is not very high. It is only 5 to 7% in our country, but it is picking up at a very good pace. People are realizing the importance of containerization. So this is translating into very good growth, and we are building up circuits in domestic in which we have been able to minimize the movement of empty containers, and that has actually helped us to a great extent in getting the traffic. Like for example, we are moving loaded containers from Orissa to Mumbai, then Mumbai to NCR region, again loaded, and NCR region to Orissa, part of that is loaded, part of that is empty. So this is like a triangle movement. I gave you one example. Similarly, we are having movement from NCR region to Gujarat, to Mumbai, and all these are closed circuit movement in which all the directions are loaded. So this way we are able to capture very good domestic business. And we have a fleet of around 40,000 domestic containers with our company, and we have given orders for containers, and we are getting almost 600 containers every month, new containers that we have given orders, and we are very, very optimistic that domestic demand will continue to grow in the coming years, and as domestic market is very strong, and we are able to give very good service to our customers also.
Sanjay, two-part question then. Talk to me about the medium term. Let's say 3 to 5 years, given this entire DFC is coming into picture as well. What could be the scale-up that we can see? Do you think it's already played out a part of it? Or do you still see a big ramp-up on account of that? And secondly, I think there was some surcharge that was put in by the government, the 10% busy season surcharge. What would be the impact on your business with respect to that?
Yeah, just to answer your first question, DFC, as you may be aware, DFC has linked NCR to Dadri and the NCR, that is a Dadri location of CONCOR, to Mundra port and Pipavav port. So we are able to run direct double stack train from Dadri to Mundra, which is taking 35 to 40 hours as compared to the road, which takes some 55 to 60 hours. So we are able to divert lot of cargo from road to rail because of the assured transit freight express trains which are being run by us in association with Indian Railways, and trade is very happy and diverting more and more cargo to rail. Now the second part is Nhava Sheva, which is going to be connected on DFC by end of 2024. This will be a game changer, and in which we will be able to capture further more cargo on our system from road, and this will also be assured transit from NCR region to Mumbai, which will be very much welcomed by trade, and we hope that we will be able to get good business. So just to give you a ballpark figure, at present the rail coefficient of containers at ports is in the range of 18 to 20%. And from 5 years from now, if everything goes on as planned, like DFC gets commissioned for Nhava Sheva, I hope that this figure will reach almost 40%. So rail coefficient of containers will become 40% at ports. That is as per National Rail Plan also. So we hope to achieve that. Second, as far as second part of the 10% surcharge that you have asked, the 10% surcharge, we have spoken to our customers. Of course, there have been some slight medium term and short term, you can say, disturbances, but now it is almost settled down. And because for the last 8 years, railway have not revised any tariff, it was remain unchanged. So now after 8 years they have revised, and people are gradually getting used to it. So we are very confident that we will be able to retain business and increase more, because rail business has got a lot of benefits which customers have realized over the years. Our company also believes that it's a green mode of transport, it's a better mode of transport. So more and more transportation should be done by rail. So we hope that we will be able to increase our business despite this increase.
Sanjay, good to know that the railway coefficient on ports is likely to more than double in the next 5 years. But did I hear talking about railways, a train passed by you somewhere around? Is that correct? Where you are sitting right now, is there a train station around?
No, my office is very close to.
Yeah, I thought so.
No, it's not the train station. Actually, it's a railway line.
I thought so. Great. So, if the volumes improve, just have a follow-up on that, the railway coefficient. If the volumes improve, what kind of other efficiencies also come along as far as your profitability side goes?
Yeah, that's a good question. Actually, once the volume improves, actually we are coming up with lot of multimodal logistic parks along DFC. So now the focus of the company is on end logistics. We are providing total business solution to our customers, and which includes warehousing and first mile, last mile logistics up to the premises of the customers from my terminal. So we were not very strong 4 years back on end logistics, and this is a very high margin business. So we are at present we are able to give end logistics to only 30% of our total volume. So that is a high focus area for the company, and end logistics is very profitable, and customers are very satisfied with our services. For doing that, we are again using the green mode of transport. That is, we are procuring LNG trucks. Already we have given order for 100 trucks. 50 have already arrived. We have positioned them at Nagpur terminal and Baroda terminal, and now they are giving service to our customers. Customers are very happy. So it's a green mode of transport. So looking into the focus of the company on ESG, that was a major decision taken by us. So we will replicate the order of 100 trucks. We will procure more LNG trucks. Mind you, it is the largest order given in our country, largest single order,
Sure.
100 trucks that our company gave.
Sure.
And secondly, sorry.
No, Sanjay, just I wanted to bring some other elements also into the conversation due to the paucity of time. Quickly, in terms of the value unlocking, you were looking at divesting some stake in the CONCOR Air. What kind of realization could come on account of that? And secondly, what happened to that entire divestment plan? Is that still underway from the pump?
See, CONCOR Air is a 100% subsidiary of CONCOR, so we are not thinking of divesting any stake in that. Regarding the second question, it's a policy decision of Government of India, and Government of India DPAM department is already working on that. So I have no comments to offer on that, please.
Last thing, Sanjay, quickly, in terms of your competition and market share, because you were losing market share to Adani's earlier and other private players, what's the market share right now and the competitive intensity?
See, our market share right now is between 65 to 70%, and we have not picked up the low margin business because that is not our objective. We believe in giving service to our customers, and of course that comes at a certain price. So our customers are ready to pay that price, and they are availing of our services. They are very happy with us. We are not very much interested to pick low volume business just to increase our market share. That has been our strategy for over the years, and that will continue to be our strategy.
We would have loved to chat more, but a little short on time today. Thanks so much for your time and speaking with ET Now.